Hooty hoo, all my stock market gamblers. Welcome today. It's Monday, July 19th. Stock market's back open and we have some fireworks going on. I mean, the stock market is down 800 points right now as I'm recording this. Now, okay, is this the big crash? Or is this still the buy the dip mentality? That's what I'm going to talk about today. Let's take a look at some things that I'm doing and that I did and what I believe is happening with the stock market. The first thing I did today was I had some puts on the XLK. If you go back to last Wednesday's video, you'll notice that I bought some puts on the XLK. In 3 days, down, down, down. Okay, I took those puts off today. I'm completely out of them. Completely out of the XLK puts. That trade worked out for me. That trade made some money. Now, why did I do that? Why did I put the puts on? Well, basically, it was just too far above the 200-day moving average. Look at the 200-day moving average is down here at 131, and it was trading up here at 154. That's almost 20% above the 200-day moving average. Now, it's just dumb luck that it went down 3 days in a row, but I'm happy about that. Real happy about that. But I took a shot. I do not think this is the market crash. Yes, we're down 800 points today, which is a lot. 800 points is a lot. Now, take a look at the VIX today. Take a look at the VIX. The VIX was trading down here at 16 just on Friday. Okay, on Friday it was traded down here at 16. Today it shot up to 24. 24. That is a huge move. People are frightened. I mean, 800 points down. Now, 800 points, it's really not that much. I mean, what is that? A couple percent maybe? 2%, let's call it. Look, when the market crashes, you're going to wake up someday, and it's going to be down over 5,000, maybe over 10,000 points on the Dow Jones Industrial Average. 800 points, it's really nothing. But what is interesting is how quickly this VIX moved up. Okay, so the VIX is now spiked up. All right. Well, that's interesting. But you'll notice how the 200-day on the VIX is still moving down. The 50-day is below the 200-day and still moving down. These are kind of still saying that it's still time to buy the dip, okay? It's still a buy the dip mentality. This is just an opportunity that's been created in the market now. Now look at the QQQs here. Okay, so the QQQs, now we've dropped down, okay? And it's not that big of a move. We were at 365, now we're down at 352. Could we drop a lot farther? Yes, we could. Do I think we will? Actually, I do not. I do not think we will. I think this is the dip that you want to buy. I think we're still in the buy the dip mentality. Now, don't get me wrong. I do think the stock market is going to crash eventually as much as 80 to 90%. Now, you can go back to Friday's video and I explained the reasons why in that. Okay, it's eventually going to come down 80 or 90%. Now, right now, we are nowhere close to that. I mean, we've got a drop here of maybe, 3%? 3% is nothing. I'm telling you. We also have what's known as the Federal Reserve. Now, did you know the Federal Reserve has a trading desk? A trading desk where they buy stocks, like Apple, where they buy stocks like Facebook, like Google, like Amazon. They have an actual trading desk, and they actually do trading. It's really part of what's known as the plunge protection team. Now, not everybody knows this. Did you know that the Federal Reserve has a trading desk? Do you want the Federal Reserve trading stocks with taxpayer money? I do not. I don't want them to trade. But they do not want the stock market to fall, so they go in and buy. It's kind of like a plunge protection team that goes in and buys. I think the plunge protection team's going to go into work today. Now, we're down 800 points at this recording. Now, maybe we do fall over 1,000 points by the end of the day. But I do think that the dip should be bought. Now, could the dip come all the way down to the 50-day moving average? It could, but I'm going to explain why I don't think it will this time. This time I do not think it will. Okay, this is what's called the Macmillan oscillator. Now the Macmillan oscillator, it pretty much registers short-term moves in the NASDAQ, okay? And right now it is telling us that we are very oversold. We're at a negative 66. Now, anything that's below negative 60 is extreme oversold in the short term. That's why I think we're going to get a bounce. This again is the Macmillan oscillator, and it's telling us extremely oversold condition in the NASDAQ. Okay, so I think the NASDAQ is going to bounce here. I think it's going to go up. Now, today I put on a call on the QQQs. Now, am I early in this trade? Maybe, but I'm only going to be in this trade a day or two. If it keeps falling, I'll get out. Don't put any money in this trade that you're not willing to lose 100% of your money. It's just a gambler's shot. I think the QQQ is oversold here, which is being told to me by the Macmillan oscillator. Okay, at negative 66, that's way extremely oversold. Okay, I think we're going to get a bounce in the Qs. That's what I put on today. Now, I didn't go crazy. Very small position. I'm willing to lose 100% of it. It is a gambler's shot. Now, if you like learning about this stuff, go to stockmarketgambler.com. Put in your name and email. That way you'll be on my mailing list, and I'll give you my stock market secrets for free. It doesn't cost anything. Just go put in your name and email if you like talking about this stuff. This is what I have a passion for. I have a passion for looking at charts. It's what I love to do. Now let's go to the next chart. Okay, now here's the Dow Jones Industrial Average. Now look at this big drop today. This is the 800-point drop. Okay, now it came down. We're through the 50-day. Now could we drop down to the 200-day? Absolutely, we could. I do not think we will. I do not think this is the crash. I think the buy the dip mentality is still in place, and it's still working, and until it stops working, you actually do want to buy the dips. And today we got a nice big dip. I was looking forward to this. Like I say, I had those puts on the XLK, and that brought me down, and I made some money on those. I'm taking some of that profit, and I put it in the QQQ calls. I'm buying the dip and betting it goes up. I love options because you can take a little money and that I'm willing to lose 100% of, and you can gamble with it. You can try to make big money. But let's take a look at the Macmillan oscillator on the Dow. Okay, here it is. Look it's down here at negative 62. Negative 62. Anything past negative 60 is extremely oversold, and you usually get a bounce right back up. Look, right here we were over 60. Boom, 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 boom. It just bounces right back up. I'm telling you, I could be completely wrong, but I do think this is a dip that still should be bought. It's not the crash yet. It's just not. The Federal Reserve, they're going to come in, they're going to buy this. They're not ready for it to drop yet. They're not ready for it to drop. They can't afford to have the stock market drop right now. So they're going to put the plunge protection team to work, and they're going to buy this market up. And by Friday, I think we will be higher than we are now. Now, may we go down again tomorrow? Absolutely. This may not be a one-day event. But actually, in the NASDAQ, it's already been a 3-day event. So I'm pretty confident on buying the QQQs. And that's what I'm in, okay? I have some, I bought some options, some calls on the QQQs. I just think we're going to get a bounce from here. We're going to buy this dip, and we're going up. Now, will we hit new highs in the stock market? Probably. It's crazy, right? I mean, the economy is just getting flushed down the toilet, but the stock market is just going up. You see, the Federal Reserve, they're not the brightest people in the world. They think that just sending people money fixes everything. It doesn't fix anything. Look, if it fixed everything, I mean, you could take a dollar bill and just add a couple of zeros next to it and make every dollar $100. Would people feel richer? Maybe they would, but things would cost more, right? They'd cost, instead of a dollar, they'd cost $100. It's just adding zeros when they send money. You cannot fix the economy by printing money, but they're going to try. And that's what's going to send the stock market a lot higher. It's going to inflate, okay? It's going to inflate. The stock market's still going up from here. I believe it will drop 90% at some point. It's not ready yet. Right now, we're still in that buy the dip mentality. And I'm a gambler, and I'm going to take a shot. I'm taking a shot at going higher. We'll see if I'm right. We'll know by Friday. Now, if you like this stuff, give me that thumbs up. If you really like it, hit the subscribe button so we can talk more. We can talk more about this stuff to see if I'm right, to see if it is going to get the bounce. That's all I got today. Get out there. Have a great Monday. Don't let the stock market get you down, although it is down about 800 points right now. But I do think the plunge protection team is on the way. It's going to bounce. That's my prediction. I've been wrong many times. I'm Tall Mike. Have a great day. Bye-bye, everybody.